UK-based Economist Intelligence Unit is predicting the cedi to depreciate by about 22% to the dollar next year. This will rank Ghana as having the third weakest performing currency on the African continent, according to the EIU's Africa Outlook 2023 report. Here's more.
The Ghana cedi has so far lost a little over 27% in value since the beginning of the year. After registering one of its worst performance in the first 11 months of 2022, it's however improved in value strongly after the staff-level agreement between the International Monetary Fund and the government was announced at the beginning of this month. But UK-based EIU expects the exchange rate weakness to continue into 2023, albeit to a lesser degree. It's maintained that the currencies of the troubled states of Sudan and Zimbabwe will be among the weakest in the world during 2023, while Ghana, Malawi, Sierra Leone, Ethiopia, and Egypt, which will all suffer from elevated rate of inflation, will see their currencies depreciate by more than 10% against the US dollar. It further said that African powerhouses of Nigeria, South Africa, Angola, Algeria, and Kenya will not be exempted from the currency weakness and will experience further depreciation of their currencies against the US dollar in 2023. Meanwhile, the Zambian kwacha will continue its performance as African best performing currency in 2023.
All right, Kweku Akokumsin is economic analyst with Data Bank Research. He joins us on Zoom to discuss the local currency's performance this year and what to expect next year. Season's greetings to you, Kweku. What a year it has been. We started around 6 cedis to the dollar, then going as high as 15 cedis. How would you describe the city's performance this year, and what were the triggers?
Okay, thank you, Daryl. So for the city's performance, just like you stated earlier, we started the year at about 6 cedis. That's about 6.4. That's how we started the year. Now we are ending at around 11.3, which should tell you we've suffered massive depreciation due to some external factors mostly. That's you're looking at how high our debt stock got to, and as
looks like we have lost Kweku there, economist with Data Bank Research. We are trying to get him back on Zoom to discuss the city. As we have been reporting this afternoon, the Economist Intelligence Unit is predicting the city to depreciate by about 22% to the dollar next year. We all have experienced the flip-flops of the city, right now gaining some stability, but for how long, the question has been, especially as analysts have said, we have not dealt with the fundamentals. We'll get right back to Kweku Akokumsin when we get him back. To another story we're following for you, producers of GTP, Woodin, and Vlisco brand of textiles have begun affixing tax stamps on their fabrics before distributing to the market. This is in anticipation of the 2023 deadline given by the Ministry of Trade and Industry for all fabrics to be affixed with the stamps or confiscated by March next year. The policy, which aims to deal with challenges of piracy and smuggling of materials, was launched earlier this year in consultation with stakeholders. Director of Marketing at Textiles Ghana, Emmanuel Debra, told Joy Business this is another sure way of getting traders to be sensitized on the new policy before it takes off.
Yeah, so the tax stamp, yes, it's been launched by the Minister of Trade, who was really, helpful. We've engaged both local and then importers. So we have started effective October. Every fabric leaving at our company here has the tax stamp on it. We are hoping that from January, we'll also make sure that we help our customers in the trade request for the transitional stamps to ensure that all the fabrics we have in the trade will also have the transitional stamps in there. Then effective March 2023, that's when, according to the minister, there will be the task force that will be in the trade to ensure that whichever African fabric that is in the trade without the tax stamp then will be confiscated. And so for us, we want the public to know that from next year, if you go to the trade and you are going to buy any fabric, you should look out for the tax stamp in there. And then also because our designs, we have our design numbers and on the label and then on the salvage, these are some of the things that we want to ensure that at least for every fabric that you buy, you have the design number on the label and then also on the salvage. Then you look out for the tax stamp as well. I can tell you that if you get any fabric, out of about 10 fabric that you see in the trade, basically about 7 or so of them will be, a copy or a fake, either GTP, any of our brands. And so this is how serious it is, which means that a lot of people buy GTP without knowing that they're actually buying the fake GTP. So that's why we want the tax stamp, yes, to come and the tax force to be able to sustain it and then make sure that, yes, we pay the right taxes to the government, because we know that the government actually also wants to raise their revenue in the system, and we feel that the tax stamp is one of the things that, if implemented well, can help them, and then also give we, the local manufacturing companies, a level playing ground with the imported fabric. Yeah.
All right, so let's move to our earlier story to do with the Cedi. Joining us on phone this time around, Kwawu Kumseng, who is economic analyst with Data Bank Research. As we were explaining the Cedi's performance this year and what has been the trigger for the sort of depreciation that we have seen, the Cedi shedding off about 54% in value to the dollar.
I was saying earlier, we started the year around 6.45. That's the mid-rate, and as at today, we are seeing the Cedi around the mid-rate levels of 11.35. And I was explaining earlier that a host of factors played into the Cedi's current performance, right? Looking at the continuous hikes that the U.S. Fed implemented, as well as some external factors that exposed macroeconomic fundamentals. So you see our weakened structural basis as well. So you realize that as our public debt kept on ballooning, and we sought help from the IMF, then it signaled to the market at large that the situation might be a bit crucial. So you realize that then we saw like more portfolio reversal, that the foreign investors started selling off their positions, right? And then we saw more strain on our reserve. And that's also coupled with the consistent downgrades from the agencies, the rating agencies, that's Fitch, S&P, and Moody's, also contributed to a very dim outlook for the year 2022. And we saw that the really depreciating rapidly. And looking at, especially in the month of October, we witnessed a very acute speculative attack on the Ghana Cedi as a result of people still believing that the Cedi was continuing on a depreciatory path. Mm-hmm. You get it? So what we realized that in October alone, the Cedi depreciated to the tune of about 26%. Yes, that was huge, and mostly fueled by speculative attacks on the local currency.
And so we have come to experience some level of stability in the last few weeks, some attributing it to positive news of an IMF deal, some attributing it to the weakening dollar. How sustainable is this stability?
Okay, so we also observed something that with the positive news, because we had been enduring negative news for a while. With the inflow of some positive news, the market reacted positively as agents or investors saw that this may be the right position to sort of take their profits and then sell off the US dollar. Then what happened was, because of the turn as well, it also informed some expectations in the near term. So we also observed some massive sell-off, right? Which may have its speculative tone as well, some speculative bits to it. And right now, I would say that the stability or the strengthening that the Cedi saw during the previous week, we are seeing some slight reversal, which I believe is more in tune with the speculative bit of it correcting slightly. But we are seeing the city hovering around, say, the 10 to 12 band area, right, where it's likely to maintain. It's likely to maintain within those regions. I point to some FX preserving moves that the Bank of Ghana initiated, such as withdrawing support for some import goods. Right? So, with such withdrawal, it aided in reducing the strain on FX reserves. And with that, it also strengthens the Bank of Ghana's intervention approach, or the intervention method in the forex market, because then they would have more reserves to actually support the Ghana Cedi West. So on the stability side, I believe we may still see some stability. Although the FX demand has now increased a bit, we may see some stability within the 10 to 12 band area. Mostly it could be oscillatory within that area.
And so as we've been reporting this afternoon, UK-based Economist Intelligence Unit is predicting about 22% depreciation of the cedi to the dollar next year. What are you seeing from where you are?
Okay, from where I am, I believe that as much as possible, we are also trying to put in place measures as much as possible to reduce the strain on our currency. Right? So we recently heard the Vice President talk about a gold for barter option, a gold for oil barter option for us selling unrefined gold for refined petroleum. We believe this move is FX preserving, as well as looking at a possible deal. And all our analysis or all our foresight will be much predicated on us securing a board level and a management level deal in 2023, preferably in the first half, or if you have been very optimistic, around the first quarter of 2023. With that, it's more likely that we see the city still maintain some stability and not endure so much depreciation, you see. And looking at the gold for oil barter thing, like I said earlier, it's also a bit FX preserving. Now, to maintain such stability, that's also predicated on us looking more at the import substitution that we've been trying to build up on, right? So internalizing most of our production, or as much as possible to advancing on the value chain in the commodities that we export. With that, I believe we may see more sustained performance from the Ghana cedi.
Yeah, exactly. And as people have pointed out, if the fundamentals are not addressed, then we are not going to see the kind of stability that we want in the long term. You mentioned some of the efforts by the central bank to purchase forex from mining and oil and gas firms. The gold for oil policy that was introduced by or announced by the Vice President. These measures, to what extent would they help in stabilizing the cedi in the long term?
Okay, so in stabilizing the cedi in the long term, like you said, if we are to go for a gold for oil barter like we are proposing now, you realize that the oil imports that come in, these bulk BDCs, the bulk distributing companies, they demand their forex from the Bank of Ghana, right? Or they allocated forex through the FX forward auction for them, the BDC. So you realize that if we are using the gold equivalent to buy the same amount of oil, then that FX that had to be auctioned off could be used to support the Ghana cedi in the forex market. You get it? So with that, it actually strengthens the interventions that the central bank can make in the currency market or the forex market. Right now, again, looking at some interventions as well, right? Such as, let's say, us getting a management level approval from the IMF, or the purchase of some FX from the mining firms as well as the oil firms, right? That these policies are all policies that will also boost or bolster our FX reserves, and hence these are more sell-side intervention boosting measures, right? Now, like I was mentioning earlier, as well, advancing on the value chain on the commodities that we export, particularly cocoa, right, would also go a huge bit, right, in also boosting reserves, because then we could get, instead of say $1 per bean, that's actually just an analytic example. We could get, let's say, a $5 per bean. You get it, and that we get more effects as opposed to what we used to get previously for the same quantity that we exported.
All right, just 30 seconds, if you can, what the implications would be if we don't fix the city's challenges.
So if we don't fix the city challenges, we can see our current inflation number being around 50.4%.
Wow.
And that was massively fueled by the depreciation of the currency. You get it? So without fixing the exchange rate issues that we are facing, we are likely to see more deterioration, especially in our city, as well as increasing cost pressures. We are likely to see more deterioration and inflation, as well as increasing cost pressures for manufacturers who usually rely on raw materials that they import. Yeah, so it wouldn't bode well for all of us if we do not see some sustained stability, or will not take measures to obtain some sustained stability in the currency.
Thank you so much, Kwawu Akukumsen, economic analyst with Data Bank Research. I appreciate your time with us. You're watching The Marketplace. Let's turn to other stories. Ghana has made tremendous progress in ensuring that local players get the opportunity to work in the mining sector. According to the Ghana Chamber of Mines, the number of locals working on many of the large-scale operations have increased and made it one of the best industries for many local artisans. Chief Executive of the Chamber, Suleiman Koni, told Joy Business that as a result of measures put in place by stakeholders, only 2% of workers in the industry are expatriates and 98% locals.
We also have apprenticeship programs, we have graduate training programs at the respective mining companies. So a number of things are being done, and as a result of that, if you go to a mine today, in fact the last data we saw, less than 2% of employees you find on the mine are expatriates. Less than 2%. Because of these training programs, we have ensured that on a regular basis we have a pipeline of employees, Ghanaian employees, actually coming through, to actually work within the mining industry. So these are deliberate, actions that we have taken as an industry because it serves us better. Expatriates cost more. Of course, they come with unique skill sets and so on and so forth. But once they come, they should be able to transfer the skills and the experiences they have to their Ghanaian counterparts. Not just that, but also making sure that through various programs, academic programs, apprenticeship programs, you have the skill sets coming through so that when people retire, when people move into other areas, you also have that pipeline of employees, Ghanaian employees coming through to actually operate in the mining industry.
All right, time to talk tech. It's been quite a year for the tech industry, and global developments have had an impact locally, be it the takeover of Twitter by Elon Musk and consequent job losses and the ups and downs on the crypto market. Joining us to look back is Marketplace Tech Pundit and lead for Eyes of Africa, Henry Kobler. Compliments of the season to you, Henry. I want to start first with your list. I want us to talk first about the e-levy fiasco. I know it has been reviewed, but even that, analysts are skeptical. What was fundamentally wrong with the e-levy, and what are the lessons from there? Can you hear me, Henry?
Yes, I can hear you. So I think the e-levy, for me personally, I had my reservations, even though I support revenue generation models for the government. I had my reservations on that, but I think that the current review that has come in would have some good impact on it. For me, most important is not just about the revenue generation, but also the building of the infrastructure, and us looking at how we could definitely boost that sector to relatively get the numbers that it's sort of looking for. So we're not just looking at just getting funding and taxes from it, but we're also looking at how it basically gets to improve in terms of the infrastructure and its reliability, its fraud management systems, and other aspects which comes into play, its employment sectors as well, and how people could definitely benefit from that sector.
My big story would be the takeover of Twitter by Elon Musk, which was quite dramatic, and then we saw layoffs consequently. Now, investors are not really sure the direction of the social media platform, what it would take in the next year. What are the lessons to learn from there, and how do you see Twitter evolve in 2023?
So for me, Twitter is going to have some level of good competition. Already, I've mentioned that TikTok is already given its good competition. But if you're looking at the vision of the founder now and as to the buyer now, you're really looking at two different aspects of it. And so I'm looking at what Elon is looking to doing with Twitter. He's looking at creating an all-in-one application. And so Twitter might not really look exciting because of the transitions we'll be going through now, and basically all the media conversations that is being had on it. But generally, I'm looking at the vision of Elon, and I'm looking at it as being a one-stop application, which could definitely solve a lot of problems globally. I'm also looking at it in terms of, and I'd mentioned it already, that Elon had critically benefited from Twitter in terms of the crypto circles. And so he's really looking to using the Twitter platform to be doing a lot of influence in terms of the crypto and blockchain sectors. And so definitely we're also going to look at some development coming in from that part. But generally, I'm looking at his vision and how it's going to evolve. It might not necessarily be inclusive of what we really think of the platform before, how we used to love the platform before, but it's also going to have a lot of evolution coming through. Already he's brought in some of the old guys, which presupposes that he's still looking at what was really the foundational concept of this platform, and he's also looking at building it towards a direction where he feels that could actually be more beneficial and more useful to people, but just not their communication tool.
And it's not just Twitter that had to lay off staff. We saw some other tech firms carry out layoffs. Anything, I'm sure, had to do with the recession or fears of a recession following the crisis we saw in this year. Do you think that dampened the mood amongst aspiring techpreneurs? Did it bring about any opportunities too?
It would, surely. I mean, it would bring some opportunities as well. But you see, the thing is that when it gets down to tech, it's very, it changes over time. I mean, really, when we're talking about time, this is like in 2 months, 3 months, everything could definitely change in the tech sector. Dumping some of these tech experts into the system is giving other people the opportunity to have experienced tech experts coming into their companies. Is giving people the bit to sort of explore other employment options and also have other skill sets which they could actually be harnessing. So Twitter might not necessarily be the ones throwing people out there. I think Facebook has actually done a lot more experts, but it's also based on a lot of some of these predictions that we make. I mean, COVID had given us a lot more to feel good about in terms of technology, but also disappointed when it had actually just drifted away from us. And so we're looking at how we basically look at bringing together some of these predictions in the tech sector. But for me, in terms of the development within its job losses, recession is really going to be higher, I mean, per my prediction. So I'm looking at a lot more people getting into the gig economy and trying to work from home. I've also predicted that there's also going to be a lot of what I will call the great resignation, where a lot more people are rather going to get out of these tech sectors themselves. Because if you're looking at the trend of some of these big tech companies having to lose some of these experts, it's also because there's a lot of innovation and a lot more good feeling to draft away from the current tech sectors into the new ones like machine learning, artificial intelligence, blockchain technologies, and all of that. And so there's that yearn to really bring some level of new revolution away from what's already running. And so there's a lot of opportunities for new and upcoming startups to be more innovative and have availability of some of these tech experts that are out of these global companies sitting and available for them to work for.
Okay. You also have on your list the Regulatory and Innovation Sandbox launched by the Bank of Ghana. Remind our audience of what this is and how helpful that would be.
Brilliant innovation by Bank of Ghana. I mean, I have always been on regulators, always seeking to have regulators do a step further and always not going with the mantra that, innovation precedes regulation. And so the sandbox, which was released by the Bank of Ghana, relatively was going to give people within the fintech community, the business fintech community, the opportunity to basically go through a process, so to say, for them to be able to launch a startup company, a product, or any other thing which is within the fintech community. And so by going through that process, all the regulatory requirements which is needed, you would have had to go through it. They would have actually been guiding you through the process. And so by the time you get out of the sandbox, you're either a better off tech company or a fintech company, or you basically would have made it through the list. And that's a very good innovation I'm looking forward to. They're actually going to go through it with cohorts. And so I'm looking forward to the very first cohort, how it turns out to be, whether it was stressful or whether it makes the process of being able to build startups very easy. And this is going to encourage a lot more entrepreneurs to come into the sector.
20 seconds, your prediction for the cryptocurrency market, which has flip-flopped this year.
Bad. But again, I mean, really, it's all across. Really, the currencies themselves, the fiat currencies are suffering. And so for me, this is actually the time to buy. This is a time to be innovative. This is a time to really learn a lot more about it. One of the lessons was the FTX going down. One of the things I'll tell people is if we get into the crypto market, learn more. Try using hardware wallets rather than the software wallets. Try and do a lot of experiments with some of these things. And I believe that is actually going to see a very high rise, especially with Twitter introducing the cryptocurrency and other platforms also introducing cryptocurrency. It's going to go high. About it.
Lead for Eyes of Africa, Henry Kobler, thank you so much. The best of the new year. We'll speak in 2023. That's the marketplace. Thanks for watching, everyone. We'll be back same time tomorrow.